Hi everybody, welcome back today. New person in the chat, Zoom call, okay, welcome. So this week has been quite interesting, so let's get into this, okay. So let's first of all understand the two major players before we go into the analysis. So first of all, let's look at the US 10-year Treasury yields, okay. So over the last couple of days, okay, and this is the beginning of this, the US Treasury, the inflation has been going quite high. So this is telling you now that the market itself is going to start to go in a different direction. So the Treasury yield, okay, is start to go in the downside. So this in comparison to the dollar index, okay, we will see that the dollar index should be now into bearish territory. So if we look at from the daily point of view, okay, we're starting to go into bearish territory. So this overall, okay, will be, sorry, that's not the US Treasury, that's the US oil. Okay. Could the person who is not on mute, put yourself on mute, please? So this is at the moment, okay, the US dollar index has just hit the supply zone. So this is telling you very soon that the dollar index or the dollar currency itself is starting to fall, okay? So when the US Treasury yield goes into bearish territory, the dollar index should follow. So this should then give you in terms of Bank Nifty and the Indian currency markets into bullish momentum. Okay, so if we look at what happened in Bank Nifty, okay, Bank Nifty hit a demand zone. Okay, the demand zone was created quite earlier. Okay, it took out, it went from a demand zone, went to the top, and now if we now look from the hourly point of view, okay, the hourly, the reason why we go from the daily to the hourly is trying to get enter as quickly as possible. Okay, it hit this demand zone quite earlier and it didn't go as deep this time, but this time it hit the demand zone and it is going further. So our bias is to hit the supply zone, then either to penetrate it and then to go to the top side, which should then make a reversal from the highest supply zone. Okay, so this should be taken out within the next couple of days. Okay, so with the market structure being at supply zone, especially the dollar index and the US 10-year yield, so the power of the dollar should be decreasing, and this should then give the dollar, sorry, the Bank Nifty and the Nifty Bank, okay, the power to continue to the top side. So if you look at what happened with Nifty, okay, Nifty itself, okay, did not go below this particular structure. So if you look at what happened on the daily, okay, it has been going in bullish mode for quite some time, okay. It hit a particular zone, did not go below it, but then it's now trying to go further to the top side. So this is telling you over on the hourly that this particular zone was not taken out. So we do have quite a lot of momentum. Okay, we've got a bullish candle that took out the previous candle. Okay, also we're getting a steady incline. Okay, so as long as it sooner breaks that top part, okay, it should then hit the top zone. Okay, and then go into buying mode. Okay. Somebody had a question on HDFC. So let's look at what happened with HDFC today. So the HDFC would be that the crash that happened, the fraud that took place quite a while ago. So if we look at from the daily point of view, first of all, okay, let's take all the indicators off. So first of all, on the daily, okay, let's look at the overall bias, okay. So we have a demand zone here. So the way we understand this is price was going in a downtrend. It kept on going down, then it hit a particular area, and from that area, the price started to go further up, okay? So this is where the first time the buyers took an interest in this area. So let's, could the person who's not in mute go on mute, please? Right. So what this really means here is this particular area is our demand zone. So I'll just fill out the blue. So price rallies. So as price went further, it did not go below here. So this is the sign that you need when a price goes from a demand zone, it cannot go back into the same zone again. So as it goes further up, okay, it starts to make another demand zone. So this is the lift off point. So from here, this is where you see your trade going up. As price goes further up, price goes further down, okay, we have another demand zone being created as well. So this would be easier, okay. So a demand zone was created here. So price did not go back into this zone, okay. Price goes to the top side. Price then makes a supply zone here because price did not go above here. Then it starts to go further down. If you now look at what happened here in this particular zone, price is not going below here. So this is a key supply zone that needs to be taken out before it is goes to the top side or the downside. Okay, so this particular zone needs to be taken out. So where we would do this is we now look at what happened on the hourly. That'll be easier for you to understand that. Let's mark that zone here. So now look at from the hourly point of view. So on the hourly, if you look carefully, what happened here? So on the hourly, price did not go below here. So price is not going to be going below here. So this is a reaction from that zone, okay? So as price reacts from this zone, this is telling you that this particular demand zone on the hourly should be quite strong. But the overall thing that you need to understand on the 5-minute point of view is look at how, so this particular zone, we're now gonna just change the color so it's easier for you to understand as well. I'll just change that to, okay. So now on the 5-minute chart, look at how price went into the zone, did not go below it, starts to go out, come back in, go back out. So the short-term high that needs to be broken is here. So this is the short-term high that needs to be broken before the trend is continued. And also, if it was to go to the downside, okay, this is the zone that needs to be taken out as well. However, because we're in a demand zone, this could go further into it, pick up more orders, then go to the top side. But this is the zone that needs to be taken out first for the buy to be continued. So if you look from the hourly point of view, That's the zone that needs to be taken out. Okay. So this particular zone needs to be taken out. Okay, and then it'll be easier for you to see what happens here. Okay, so as soon as price goes into here, might going further down, we need to see price to do this on the hourly for the price to continue. Otherwise, it's just going to go into this. But the overall thing is that price needs to go back into the area before it starts doing its thing. Okay. Does anybody have any questions on any of the charts or any charts that they want analyzed? Anybody want to say anything? You can.
Hi, Kaman.
Hello. Hello, Farah.
I just want to know two things. One is about the supply and demand zone that we create.
Yes.
So generally, it's a range, the price range, right?
Yeah.
So when is the exact entry to be, like, we are supposed to enter at the base price or at the, like, the highest price, like if it is 1350 and 1375 range?
Okay.
Supply. So when are we supposed to make an entry?
All right. So the first thing we do is by identifying on the highest time frame, which is the daily time frame, we mark the two zones. So the two zones are the supply and the demand. Okay. The reason why we do that is institutional levels are at the lowest point is the daily. Okay. So as price reacts from the daily zones, we then capture it on the hourly for your intraday trading. So as you see price going further down, it's reacting at key levels. And as you can see here, price did not go further down on this particular demand zone. Okay. As you can see in the first instance here, price did not go below here, price reacted. Okay. So that's a key level that needs to be taken out. Okay. If price was to go further down, it would be here that it needs to be taken out. But this is the area that it didn't go down to, so it starts to go here. So if price does go down, okay, so at this moment, the best thing would be to do is wait for the price to either go back to here for your best entry, or see what happens when it breaks this particular structure on the hourly and let it continue. Okay, best price to enter is here. Okay, and that will be then easier for you guys to see what happens. But overall, when it comes to a particular demand zone or a supply zone, okay, this is the time where you don't do anything. Okay, the reason why you don't do anything is that you've got to first figure out what's really been going on, so that you understand why prices move from particular areas. Let me just mark this with a price label here. So at this moment, the price label here is the 2277. Okay, so the best price would be, if possible, okay, but if you can wait it out, buy from here, because you buy at the best price, which is the lowest. Okay, because this is where the most of the buyers buying pressure started from, because this is the secondary position. Okay, if price goes above the 2277, okay, let it continue, and if it does go up, we expect the price to go to the top side. Okay, but with this in correlation with the dollar index, the dollar index has hit a particular supply zone. So this is telling you that the dollar index is starting to go to be falling. It hit this area, fell, hit this area, fell, it hit this area, and it should fall as well. If you look at the US Treasury yield, okay, this is starting to fall. Okay, so the US Treasury yield, which is the bonds market, is going to be instructing the dollar index that this is the move I'm going to be making. As soon as they're in correlation, if both are in bullish mode, that would mean that all Indian currencies will go in the opposite way. So if they're in bearish, this will become bullish. And if they're bullish, they become bearish. So if we look at the last couple of weeks, okay, prior to this, on the daily, it's been in bullish mode on daily institutional levels, okay? And if we now look at dollar index on the daily level, institutional level, we're in bullish mode. If we now look at Nifty on the daily point of view, it has been going into bullish, but suddenly it's gone into bearish in the opposite direction. So whatever the dollar index is doing, we do the opposite. But if both do the same, as in dollar index and the US Treasury yield go into bullish mode, that's the correlation that you need, that the Nifty bank, the bank Nifty, all the Indian currencies will do the opposite of what they're doing, okay? If we look at GBP USD now today, with what's just happened, the dollar, this should be going into bullish mode, okay? So if we look here, on the, so dollar index is in bullish, this is all bearish. It always does the opposite, but you need to see the correlation, okay? Why one does one and then the others do the opposite, okay? If we look at it from the Euro USD that I've got, okay, the Euro USD is starting to go into the bearish mode. It will eventually go into my Black Friday sales discount period, okay? That is where the best time would be to buy, okay? Remember, I marked this chart back in last year, okay, explaining, okay, why the price would be going here, because these lows need to be taken out, but the US Treasury yield has been going in one direction, bullish. They're going to go into bearish mode. If we now look at any other stock, do you have any stock in mind?
No specific stock.
Sorry?
No specific stock, because I am into only index.
So if we now look at Apollo Hospitals, okay, if we now look from the daily point of view, okay, they're in bearish mode, okay. If we now look from the hourly point of view, okay, they're in bearish mode, okay. This is all to do with the dollar index. Dollar index on the hourly is going back into the supply zone, trying to get some more orders, but it's failing to make higher highs. This is correlated here, that they are not able to make any higher highs, but the overall trend on the Apollo hospitals is in bearish mode. Does this make more sense now?
Yeah, perfect.
Good. Anybody else got any other questions?
Also, I would like to know about the fear factor. If you could just give guidelines on that. Right.
The fear factor is the one that the fear factor one you've got to understand is a different one. I'll tell you which one it is. So we have the VIX, okay? The volatility index is S&P 500. The S&P 500 is the fear factor one.
Okay.
This is the one that you need to understand the most, okay? So in the chart that I said quite a while ago, is this particular zone needs to be invalidated for the sell to continue. Look at how it hits this particular area. And before that zone was created, price went into the zone and then it went further up. So that was the demand zone. As now price goes further up, this is telling you that the fear and greed, so fear and greed here is starting to go in the opposite direction. This is the best way to understand fear and greed in the markets with the volatility S&P 500 index. As greed goes more, the bullish mode will be going in quite a few different things. But in terms of normal fear and greed, you've got to market charts in a more systematic way so that it makes more sense. Because if the trade doesn't make sense to you, you're not going to be able to enter it. Okay. So by marking higher highs, higher lows, lower highs, okay, this will tell you when to mark. And by entering at the right zones, this will give you the confidence that, okay, we buy at the bottom, we sell at the top. We buy at the bottom, we sell at the top. Remember, I only trade 2 or 3 times a week. Okay. If my setups are not there, I'm not going to be entertaining anything. So in the same way, if the setup doesn't make sense, if the setup isn't right, for whatever silly reason, okay, do not enter that trade. And if you're going to be entering for just a couple of pips, okay, make sure it's at the right level so that you can get your maximum profits. Make sense?
Okay.
Good.
Yes, perfect. Thank you.
Thank you. Anybody else got any other question? Right. Good. But the overall thing you guys got to understand is, how does the dollar index and the US 10-year yield, okay, have the biggest say in who is controlling the market, okay? So if you now look at my other pair that I've got is the NAS 100, okay? This will be telling you a different story as well. So here, they're going from the supply zone, okay? Remember, I entered quite a while ago here, okay? Hits the supply zone, I'll be entering or I'll be exiting very soon from that area, because there's no point on going forward, okay? Because the supply and demand of the dollar index and the US Treasury yield, okay, isn't in my favor at the moment, okay? So this will be taken out very soon, okay? So this was a very, very good profit. But the overall thing is, you've got to understand how things work, who are the players that move everything, because you've got to understand the bond market, you've got to understand the dollar index, you also got to understand supply and demand, okay? So the MMM group, the market maker method group, okay, that you guys are in, okay, some of you guys are not understanding their version is because all their levels are from this, are from supply and demand, okay? The way I do my strategy is the most simplistic way without any indicators, okay? This is the market maker method. This is supply and demand. This is the Wyckoff theory, okay? But it's in a more simplistic approach. Understand one particular way, and then you'll be able to master all markets, okay? So this doesn't matter if it's the stock market, if it's the FX market, if it's the futures market, okay? Supply and demand works on all. And once I prove this on the options market, you'll see a different strategy itself. Not understanding your question, Shayna, okay? Rephrase that question, please. Oh, what is it? So NAS 100 is, it's basically takes the 100 companies of the stock exchange and puts them into one area, okay? So the Microsoft companies and all them, okay, are in this particular one, okay? So by understanding how they do it, trade will be easier, okay? So it's a big company, okay? It's a bit like that, yeah. Now, yeah, NAS 100 is the 100 companies, Nifty 50, same thing as well. Yeah, you could classify that as a Nifty 100 in India. Yeah. Okay. So, but overall, okay, try and understand this, how this works, and you'll see how to do it on a lower level. But by marking it on the highest time frame possible, which is the daily level, then go down into the 1 hour levels and see how it reacts. So if you now look carefully at what's really been happening here on the NAS 100, okay, price is starting to go down. Hello? Are you asking a question, or are you just yeah, okay. There is options trade, okay, but this is where those guys in the group, okay, have what we call the volatility index 50, 75, and all that stuff. That's what they do. So as you can see here, okay, the price is starting to go further down, okay, from that particular zone. So this is telling you that the overall trend or the bias is starting to go a bit down to the downside. So this will be confirmed very soon. Okay, what happens if we now look at the 5-minute point of view, right? The price is just going further down, so it should be taking out quite a few zones. Okay, right. Anybody else got any other questions for today? Right. Okay. Before I do go, okay, make sure you guys are in for that call with Gift. Okay, he'll be explaining a few more things on the pool club or how to do some investments with him. Okay, so go. Remember, it's for that 7:30 p.m. Okay, for you guys, and then it'll be easier for you to understand a few more things. Okay, right. Thank you much everybody for today. Okay, and get your charts in for all this stuff, and everything will be as simple as possible.